consumer price sentiment, a look at how consumers are feeling about prices right now and contrasting that with how confident they are in their current situation. So consumer price sentiment. Let's explain what this is and how it might compare and contrast to a common measure called consumer confidence.
Yeah, this is a scary chart, right? So, but if you just take it at face value, you're saying, oh, wow, consumers think large household durables, houses, and vehicles are the least attractive they've been, or my sentiment towards them is the worst it's been in the history, basically, of this survey. So, University of Michigan Consumer Sentiment Survey goes back to the 70s. And you think, wow, well, the purchases of these goods represent a huge portion of GDP. The economy is going to collapse. But the devil's really in the details here. You need to make sure we understand exactly what this is and what this isn't. So what it is the University of Michigan just surveys consumers and asks them, for example, on houses, do you think now is a good time to buy a house? Bad time? Are you indifferent, or do you just not know? And somebody will respond and they'll say, oh, I think it's a bad time to buy a house. And the next question is, well, why do you think that? And one of the options is because prices are too high. And you tally up, basically each of these lines takes the difference between how many people said, oh, now's a good time to buy a house because prices are low, minus how many people said, oh, now's a bad time to buy a house because prices are high. Right. And when this number goes negative, it means a lot more people think it's a bad time to buy a house because prices are high.
Yeah.
That's what this means. It does not mean that any of these people being surveyed are actually in the market to buy a home.
Right. I mean, contrast that to thinking versus acting and what consumers are actually doing.
Yeah. I mean, you could view this now and say, well, maybe this is a result of news coverage is just so much broader and so much more point in time now than it was back in the 80s. And so every consumer knows that housing prices are high. Everybody gets inundated with news articles about how home prices have gone up tremendously and it's very difficult and people are struggling to buy homes right now. And so that gets reflected in the survey. You say, okay, well, news is doing its job. But it doesn't necessarily mean that people are being scared off of buying homes, because then you ask those same people, well, what is your overall confidence in your financial situation, in your ability to consumer confidence? And that's actually coming back up, because we know what really matters is people have savings, people have jobs if they want them, and people are generally getting wage increases. Personal incomes are at record highs. So people have confidence to buy a house, but they know now isn't a good time because prices are high.
And from what we're seeing in the recent data, people are planning to purchase houses and large durables and go on vacations and spend money in the next 6 months. That's coming through in the consumer confidence survey and other high frequency data. So as we look at that survey, what does that tell us in terms of the overall trajectory for the next maybe 3 to 6 months of the economy?
Yeah, so you look at that survey and you think, well, consumers have money and they are planning on spending it, but perhaps some of them aren't going to buy a house in the next couple of months because they'd rather wait out these high prices. So that would mean demand for homes is going to be sort of foregone in the near future. It will be pushed further into the future. It does not mean that it is lost. It does not mean that the money is destroyed. Consumers still have the money. Maybe they'll just spend more on services until home prices come down a little bit, and then they'll go out and buy a house. So in our view, when you look at negative price sentiment like this for these types of items, what it effectively does is lengthens the duration of the economic cycle, because people aren't necessarily losing the money they were going to use to buy a house. They're just not going to make a transaction right now. They'll probably make that in the future. Another way to look at this is the red line. Oh, well, buying conditions for a house right now are bad because prices are too high. Well, that's actually great news for anybody that owns a house, because the value of your home has never been higher, right? So, that's a big asset on your balance sheet. You feel very wealthy, and that speaks to consumer confidence again.
Yeah. Yeah, I think to sum it up, this has a lot of bullish undertones as we look at this chart going forward for the next couple of quarters. So, any other thoughts on consumers just in general?
Consumer sentiment in general is a pretty volatile number. At the end of the day, we follow the money. What matters is, do consumers have money? Do they have savings? Do they have incomes? Do they have jobs? They will spend. Maybe they won't spend on these items right now because prices are too high and the media coverage is scaring them away, perhaps. But that doesn't mean that they will stop spending in totality. It does not necessarily mean that the economy is going to collapse. It just means buying habits may be shifted in the near term.